One of these 7 mistakes can quietly cost you tens of thousands of euros, and most expats make at least 2 of them before they even unpack. I've spent my career as a finance executive in Portugal. Here's what the relocation blogs don't tell you. Quick note, this is general information based on the law in force in July 2026, not tax or legal advice. Confirm your own situation with a qualified professional. Mistake 1. Becoming a Portuguese tax resident by accident. Under Article 16 of the Portuguese Income Tax Code, spending more than 183 days in the country, consecutive or not, in any 12-month window starting or ending in the tax years, makes you a tax resident. Not calendar years, any 12-month window. Count your days like an accountant because the tax authority will. Mistake 2. The housing trap. You can be tax resident with far fewer than 183 days if, on any day of that period, you keep a home in Portugal in conditions that suggest you intend to occupy it as your habitual residence. That's also Article 16. Buying or long leasing a home for later can make you resident now. Residency disputes on exactly these rules have gone all the way to Portugal's Supreme Administrative Court, as recently as 2026. Mistake 3. Planning around a tax regime that no longer exists. The famous NHR closed to new applicants. Its successor, the IFICI, Article 58A of the Tax Benefits Statute created by the 2024 State Budget Law, is much narrower. A special 20% rate on Portuguese employment and self-employment income for 10 years, only for eligible scientific innovation and highly qualified activities, and only if you were not resident in Portugal in the previous 5 years and never used the NHR. If a blog promises you 0 tax in Portugal, it is describing the past. Mistake 4. Qualifying for the IFICI and losing it to paperwork. Registration must be submitted by the 15th of January of the year after you become resident. That deadline is set by regulation. Miss it, and you may have thrown away the single biggest tax benefit available to you. Mistake 5. Assuming Portugal only cares about Portuguese income. As a tax resident, your worldwide income is generally reportable in Portugal, and tax authorities exchange financial information automatically across borders. They won't know is not a strategy, it's a penalty waiting to happen. Mistake 6. Paying tax twice out of ignorance. Portugal has an extensive network of double taxation treaties and reliefs typically exist, but they are not automatic. You must claim them with the right forms and the right timing. Every euro of unclaimed credit is a donation to a tax authority. Mistake 7. Doing it all yourself and documenting nothing. Cross-border cases turn on evidence, entry and exit dates, leases, utility bills, employment contracts. Keep records from day one, and for anything complex, pay for professional advice once instead of paying penalties for years. 7 mistakes, 1 theme. Portugal rewards the well-prepared. If this saved you money, subscribe to Portugal Life Compass. Next week, what the IFICI really requires line by line. The full legal sources are in the description.